You're entering CNBC TV 18's virus-free studio, powered by Century Laminates and Century Ply.
You're with us here on a fresh new edition of Midcap Radar. It's Friday, last day of the week before we go into the weekend. The market is off the lows by quite a bit. 110 points off the lows to be precise. 11,442 is where things are at. Market breadth, though, of course, is still negative, as you would imagine it would be. And, but there's a fair bit of activity in individual stocks, both up and down. And we'll get down to talking about some of them. Banks are also off the lows. I mean, that index is down 0.8%, which means it has also seen a fair bit of recovery over the last couple of hours or so. With me, my colleague Sonal Bhutra. Hi, Sonal.
Hi, Prashant. Good afternoon. Yes, banks have seen some recovery, and also the auto stocks. They are doing well and they are off the lows. So we have Maruti, Suzuki, we have Bajaj Auto and Hero MotoCorp also doing really well. Tata Motors also joining that suit. And in the broader market, it's Granules that is at record high as we speak. That stock is up 5.5%. Yes, a lot of mid-caps are not doing well, but this particular stock really caught my eye. So that stock should come up for you on the screen, and other pharma names as well, like Unichem, that is also up around 6-odd%. So a lot of stocks in focus, but first up, the top headlines. Sea of red across Asia following meltdown in US technology stocks. Sensex Nifty down over 1% each, but off morning lows. Finance stocks fall the most. Few stocks like Bharti Infratel, Maruti and Tata Motors trade in the green.
Well, Vodafone Idea's board meets today to consider fundraising options to meet government's AGR dues. The board may also consider bids for the sale of its fibre asset. Market is abuzz with names of institutional investors who may be approached for equity funds.
The CEO of Indian Hotels, which manages many marquee Taj properties, says their homestays are pre-booked for over a month. But a pickup in the core hotel business is still some time away. Stock trades lower in trade.
Bank stocks are under pressure on profit-taking and on fears courts may disallow charging interest on interest from borrowers who availed moratorium. Kivi Kamath panel is expected to submit to the RBI rules that should govern corporate loan restructuring. That report is expected to be submitted today. All right, Hemen Kapadia is with us as always on Fridays. Hemen, thanks very much. Good to have you here. You know, the markets, of course, I mean, we saw that big crack, not staying down for far too long, almost 50% recouped. What do you think? Which direction for the rest of the day?
Very good afternoon to you, Prashant. Thank you for having me. I think every Friday we speak and there is always some buzz, and the market rolls on. This time it seems slightly different. Range, Prashant, 11,326, 11,585. On the panic sell-off day, we went to 11,326. Today we went to 11,332. So we've almost come there. 6 points on 11,000 doesn't mean much. So as of now, I think we should be stable. There has been a bearish gap from yesterday's closing and today's opening. That has been partially fulfilled. So till this gap doesn't get covered up, I think the pressure will remain. So frankly speaking, if you're saying how's the direction going to be for the rest of the day, I think it's going to be mixed. But for the next couple of trading sessions, if 11,326 holds, I think then we should see some sort of stability coming in and not much to worry. If it breaks, then I believe 11,150 is the next major support. So currently, it's in a no trade zone. We saw large downward bar reversal coming in, Prashant, on Monday. Since then, we've been in this range from Monday onwards. Neither have we broken the bottom, neither have we crossed the top. So I guess a small cool-off period coming in after a phenomenal run, Prashant.
Okay, so a small cool-off period coming in after the phenomenal run. But Hemen, what are your individual stock picks today?
Yes, because despite everything, one gets the feeling that at least some of the stocks are showing technical positives. I mean, we can start with Bandhan Bank. Bandhan Bank, the mechanical indicators have given a crossover buy and they continue to remain so. Even the intraday indicators are showing positivity. The stock is on the verge of giving an upward key reversal today. Obviously, it's not over. We still have a couple of hours left. So buy on Bandhan Bank at 310, stop loss 304, target 324, 2-3 trading session call. Secondly, a buy on TCS. The entire IT sector is beginning to look good after almost 29 to 30 trading sessions of a sideways movement. Now, TCS looks good. Even the daily and the weekly indicators have now turned positive. So it's a shorter term call, but I think it can be a positional call also. Buy on TCS at 2300, stop loss 2250. Target is a modest 2400, but in the last 3 to 4 years, TCS hasn't been able to take out these upside levels. And if it does that, it's threatening to do so. I think we should be comfortably overshooting the target that I have. And lastly, it's a contra buy call on Bajaj Finserv at 6400, stop loss 6150, target 6700. Almost 13 weeks of a sideways movement, nothing happening. We are seeing some sparks of life. It looks like a consolidation. Like I said, it's a slightly high risk call. So a buy call on Bajaj.
Okay, Hemen, thanks for joining us and giving us all your picks. Tata Motors UK sales are flashing for you on the screen. It looks like a good set this time. Total JLR UK sales, they are up around 14% on a YY basis and have come in at 3,101 units. Stock also doing well, up around 0.6% right now. But let's move on. New account openings, they have seen a huge surge while institutional participation has plunged. Prashant has all the numbers. Prashant, over to you.
Well, thanks for that. So as we have been pointing out, the number of new participants in the market has shot through the roof, not just here in India. We put the data out for India and what's happening in other markets, almost 3 or 4 months back, I mean, in the depths of the lockdown. And it has only continued to climb. Month after month, the number of new participants in the market has gone up. And hence, I mean, the question we are putting up is, who is the new money in markets? When you say, well, institutional participation is low, but markets are continuing to rise, I think you can find some clues in the data that I'm about to put out. Let's go to the first graphic, and this, I think, makes it abundantly clear. This is the number of new Demat account openings every month, right? And I've started from March because March basically is when we saw that lockdown. 7 lakh, 7 lakh, 7 lakh, 10, 9, 11. The last is, of course, the month of August. And this is the very latest data. The data is released as of the end of every month. So 11 lakh, it's a new high, monthly high, since, I mean, this entire COVID business began. You total all this up, 51 lakh accounts have been opened, right? Now, you might say, well, what is 51 lakhs? To put that in perspective, what I've done is I've taken the previous 6 months, right? September to February, we saw 27 new lakh accounts opening. That compares to 51 lakh in the subsequent 6 months, March to August. And by the way, that number would have also been much lower had it not been for the fact that September itself, the month of September 2019, saw 19 lakh new accounts. You strip that out, I mean, that number would have looked very, very small. September 2019 was an abnormally large month for whatever reasons, and hence I'm just pointing that out. But even this comparison shows you how the pace of new investors coming into the market has gone up. I mean, it's actually vertical. All right, let's move on to the total number of Demat accounts, which stands at 4.52 crores. It stood at, in February, pre-COVID, stood at 4.0, at the end of Feb, stood at 4.01. That's 51 lakh new accounts which have been opened. So, I mean, it's really something, the pace at which this addition has happened. Now, we come to the next data point, which is institutional participation. And I've sort of put these numbers up previously as well for the last, I think 2 or 3 times over the last 5 months now. And I've done the latest for as of the month of August. Let's go to the first graphic. This is basically, when I say institutional, I mean DII plus FII as a percentage of the total market turnover. The blue box is market turnover. Market turnover in the month of August was down 3.7% over the previous month. But I think the more useful number is that second set of graphic there. So August compared to January to July, market turnover went up 25%, but institutional turnover was down 11%, right? And hence it kind of links back to the previous point. Is it the 51 new lakh accounts? These are direct equities mostly, which is leading to this kind of, support to the market, even though, institutional participation has slacked off. We don't know, we don't have hard numbers to make that conclusion straight away. It could be old accounts also which have become active and not the new accounts. Okay, let's move on. Just 2 more graphics here. This is institutional share of institutions as a percentage of the total market. It's at 15% now. It's gone up a little bit over July, but that is because the denominator has gone down. I mean, when I say denominator, I mean the total market activity in August over July fell a little bit. It's not because institutional participation went up. So it's 15% still at extremely low levels. In the month of March, that was almost 30%. Okay, what else? Whatever is not institutional, I've categorized into HNI, retail, family offices and things like that. So that number stands at 85% now. And it's basically seen the opposite trend of what the institutional participation has seen. So, I mean, I just thought interesting to look at these numbers when you look at what is happening on a day-on-day activity, especially in the cash market stocks. And the huge surge in volumes that we have seen over the last couple of months. Back to you guys.
Oh, absolutely. It's quite interesting to see those trends, but it's time to slip into a short break. Then Ranbir Singh, President and CEO of GNA Axles, will join in next to discuss the demand trends and FY21 outlook.